All right, team, Dave here, and you know the drill. We're asking the million-dollar question. Is the bottom in for a tech titan that's been making headlines? Today, we're diving deep into Microsoft, ticker MSFT, because let's be honest, everyone's wondering what's next for this behemoth. So, what's the buzz on the street for Microsoft right now? The main story, the narrative that's been swirling, is all about AI. Specifically, there's a good chunk of skepticism out there regarding how quickly Microsoft can actually turn all that amazing AI innovation into cold, hard cash. We've seen reports, which Microsoft denied, about potentially lowering sales quotas for AI products, and that sent a little shiver down the stock's spine. Couple that with broader market jitters, weaker private payroll data hinting at potential Fed rate cuts, and you've got a recipe for volatility. The market's watching closely, wondering if Microsoft can truly convert the AI hype from events like Ignite 2025, where they showcased incredible advances in Azure AI and Copilot, into consistent, accelerated revenue streams that justify its massive valuation. It's this tension between their undeniable innovation and the market's show-me-the-money attitude that's driving a lot of the current sentiment. For those of you new to the game, let's quickly set the stage. Microsoft Corporation, founded way back in '75, is far more than just Windows and Office these days. We're talking a sprawly empire across productivity and business processes, their intelligent cloud segment, think Azure and all things server, and more personal computing, which covers Windows, Surface, and, of course, Xbox. They're a global powerhouse, licensing and supporting software, services, devices, and solutions. Now, what's key here is that while the market is focusing on AI monetization, Microsoft's management continues to report super strong underlying growth, especially in its cloud segment, with a whopping $400 billion in commercial RPO, or remaining performance obligation, which is up 50% year over year. That's a massive forward indicator of future revenue. Now, this is where the rubber meets the road. How do we take that market skepticism about AI monetization and reconcile it with Microsoft's own strong guidance, particularly that massive commercial RPO? It's a delicate balance, and that's why we crunch the numbers through different scenarios. Let's kick things off with our base case, which we're giving a 50% probability. Why 50%? Because despite the AI noise, Microsoft is a fundamentally strong company. This scenario assumes they continue to show robust underlying growth in their core cloud services. That $400 billion commercial RPO isn't going anywhere, and it's a huge tailwind. We're also assuming the initial challenges with AI monetization are manageable. They're a diverse company, so a slight hiccup in one area isn't going to derail the whole ship. From a valuation standpoint, we're starting with their current EPS of $14.06. We then project a conservative 15% EPS growth for the next year, which brings us to $16.16. Applying a target PE multiple of 32x, which is a solid but slightly normalized multiple for a tech giant like MSFT, gives us a fair value of $517.41. And looking at the chart, the stock is currently within its downtrend channel, but it hasn't broken those critical support levels, which gives this base case a strong footing. Next up, our bull case, coming in at a 25% probability. This is where Microsoft truly nails the AI game. Imagine they accelerate AI monetization faster than anyone expects, proving the skeptics totally wrong. We're talking widespread customer adoption of Copilot and Azure AI services, driving revenue growth blows past current analyst forecasts. Those innovations we saw at Ignite 2025? They'd translate quickly into massive enterprise contracts. Plus, if the macroeconomy picks up, that's just more fuel for IT spending. Why 25%? Because, while exciting, this needs a significant positive shift. And on the chart, for this to really take off, MSFT needs to maintain above 495, which would signal a renewed uptrend. If that happens, this scenario gains a lot of traction. For the numbers, we'd see a 20% EPS growth for the next year, pushing projected EPS to $16.87. With increased investor optimism, we'd apply a higher PE of 36x, landing us with a bull case fair value of $607.39. And finally, the bear case, also at a 25% probability. This is the scenario where AI monetization struggles intensify. Maybe adoption is slower than expected, or competition heats up, eating into Microsoft's market share. If the economy takes a turn for the worse, that strong commercial RPO could see a pullback in spending too. The reason this probability isn't negligible is heavily influenced by the technicals. The chart has been in a downtrend channel for weeks after forming a double top. If MSFT fails to hold key supports at 461, 450, or especially 440, it validates these concerns and increases the likelihood of this bear case playing out. In this scenario, we project a more modest 10% EPS growth, bringing projected EPS to $15.46. With decreased investor confidence, we'd see a lower PE multiple of 28x, giving us a bear case fair value of $433.05. All right, let's pull up the chart for MSFT. Here's what I'm seeing, and it's pretty straightforward. Microsoft has been stuck in a downtrend channel for weeks now, which started right after it formed a clear double top. Not exactly a bullish sign. Sign there, folks. Looking at the crucial levels, we've got key supports coming in at $461, then $450, and a stronger one at $440. These are the lines in the sand to watch. Now, if you're hoping for a renewed uptrend, the stock absolutely has to maintain above $495. That's the hurdle it needs to clear to shake off this bearish momentum and signal brighter skies ahead. So, is the bottom in for Microsoft? Based on our deep dive, with a 50% probability on our base case and an equal 25% for both the bull and bear scenarios, my verdict is the bottom isn't definitively in yet, but it's certainly hovering around interesting levels. The fundamental strength is undeniable, but the market's show-me attitude towards AI monetization, coupled with that clear technical downtrend, means we're in a period of consolidation and uncertainty. We're leaning towards continued solid growth, but with a significant watch on those technical levels. This isn't a run-for-the-hills situation, but it's also not a all-clear, full steam ahead either. Given our scenario analysis, if you're looking to start scaling into MSFT, I'd consider these levels. Our base case fair value is $517.41, so any dips below that, especially towards our key support levels, could present value. If the stock drops towards the 461 to 450 range and holds, that could be a strong entry for a long-term play, aligning with our base case. And if we miraculously break above and hold $495, that confirms a renewed uptrend and gives us more confidence towards our bull case target of $607.39. All right, you brilliant minds, that's our take on Microsoft. If you found this analysis helpful, you know what to do. Smash that like button, subscribe to the channel for more deep dives, and tell me in the comments below, what do you think about MSFT's AI prospects? Is the bottom in for you? Just a quick reminder, folks, I'm Dave, not your financial advisor. This is for informational and entertainment purposes only, and it's based on my research and analysis. Investing in the stock market involves risk, and you could lose money. Always do your own due diligence and consult with a qualified financial professional before making any investment decisions. Don't just blindly follow me, because your financial situation is unique.